Hello and welcome to the Insurance Guru, and thank you for asking the questions. This is one of the questions I received today. What is shortfall cover? So shortfall cover, otherwise known as vehicle credit shortfall, is to cover you for the difference in amounts between what your car is worth as opposed to what you owe at the bank. So when you go and you buy a car that is 100,000 rands, you go and get financing. But with financing, banks add all sorts of things. You find that actually your repayment amount might be 120,000. I'm just thumb sucking this, but it's 120,000. Therefore, your car's only worth 100,000, but the financed value, the financed amount is 120,000. That 20,000 is the shortfall, and therefore you need to take insurance with it so that if you go and write off your car in 2 days after you got it, the 100,000 will be paid to your bank. In addition, they will also pay the 20,000 rands cover or the 20,000 rands amount that was the shortfall. That is really the long and short of it, and it's trying to protect you as a client, because if you don't take the shortfall cover, something does happen to your car today, tomorrow, you're going to be stuck. Yes, your insurer will be able to pay the bank if the claim was valid, but the challenge is you're going to have this extra 20,000 or 40,000 or whatever the amount is that you have to pay back to the bank for something that you don't have. So it's always advised, if you're buying a car from the dealer and you're getting finance for it, take the shortfall cover. After about a year, 2 years, check with your insurer if there still is a shortfall. And if there isn't, then you can take that vehicle credit shortfall cover out of your policy and pay a little bit of a lesser premium. I hope that does help you, and please keep the questions coming.